Keeping cash in the bank is like standing still in a race where inflation is constantly moving forward. It means losing value over time. So, where should you keep your money instead? In this video, we're sharing expert advice, 7 smarter places to keep your cash. We want to help your money grow and protect its value. Watch until the end to find out which choice could be the best for you. Give Luxo-Life some love, and let's get started. Gold and silver have been trusted for centuries as stable assets that hold value. Unlike cash in the bank, these precious metals don't lose buying power as quickly when inflation rises. Many people choose them as a way to protect their wealth over time, especially during economic downturns when traditional savings can fall short. Gold and silver can provide peace of mind because they generally keep their worth, even when markets are shaky. One of the main reasons people invest in gold and silver is their ability to guard against inflation. When prices for everyday goods go up, the value of cash can decline. But gold and silver tend to hold steady. This makes them ideal for long-term savings, as they're not as affected by changes in the economy. While the prices of gold and silver can fluctuate, over the long term, they usually retain a reliable value, which is why people often turn to them to secure their money's worth. For those interested in investing, there are a few ways to get started with gold and silver. Many people prefer to buy physical metal, such as coins or bars, which they can hold on to directly. Others choose to invest through exchange-traded funds, ETFs, that track the price of these metals, offering an easy way to buy and sell without handling the actual metal. Each approach has its own benefits, depending on whether you want the flexibility of an ETF or the tangible feel of physical gold and silver. Real estate. Real estate is another popular way to grow wealth over time. Unlike some investments, real estate is a tangible asset, meaning it's something you can see, touch, and use. One of the main attractions of real estate is that it often appreciates in value. This means that, generally, properties become worth more over time, making real estate a valuable long-term investment. Not only does this help protect against inflation, but it also gives investors the potential for a steady cash flow if the property is rented out. Many people are drawn to real estate because it can provide rental income, creating a regular source of cash that can help offset expenses or grow savings. When you own property that generates income, it can serve as a reliable financial cushion. This steady cash flow from rent can make real estate an attractive option for those looking for a stable income stream beyond traditional investments like stocks or bonds. Additionally, real estate's value typically moves up over the long term, which can make it a more dependable option when inflation rises. There are a few different ways to invest in real estate, each with its own benefits. One common approach is purchasing a property directly, like a house, apartment, or commercial space. For those looking to avoid the responsibilities of being a landlord, there are options like real estate syndications or crowdfunding platforms. Real estate syndications allow groups of investors to pool their money to buy larger properties, sharing the income and any appreciation in value. Crowdfunding platforms offer a way to invest smaller amounts in various properties, providing access to real estate with a lower upfront cost. Real estate investment trusts, REITs. If you don't like the hassle of managing property yourself, real estate investment trusts, REITs, could be an ideal solution. REITs let you invest in real estate without dealing with the responsibilities of being a landlord. By investing in REITs, you can still benefit from the income and potential growth that real estate offers, but with a much simpler approach. This makes REITs a convenient option for people who want exposure to real estate without the direct management. One of the appealing features of REITs is the steady income they often provide through dividends. Since REITs are required to pay out a large portion of their profits to shareholders, they can offer regular returns. This can be especially attractive for investors looking to generate income or diversify their portfolio. Unlike owning a rental property directly, where rental income can fluctuate, REITs aim to offer more stable dividend payments, making them an attractive option for those seeking consistent returns. REITs are also easy to access. Publicly traded REITs are available on stock exchanges, just like shares in a company. This means you can buy and sell REITs whenever the market is open, providing flexibility that's often lacking in traditional real estate investments. If you decide to adjust your holdings, REITs allow you to do so quickly and easily, giving you more control over your investment. Dividend stocks provide a steady way to earn income while also having the potential to grow in value. These stocks pay out a portion of a company's earnings to shareholders, known as dividends, on a regular basis. This makes them a popular choice for investors looking for both income and the chance to see their investment increase over time. Holding dividend stocks can add balance to an investment portfolio, providing more stability than high-growth stocks alone. The income from dividend stocks can be especially attractive because it arrives consistently, often every quarter. This regular payout can serve as a reliable income source or be reinvested to buy more shares, leading to what's known as compound growth over time. Reinvesting dividends allows your investment to grow at a faster rate, creating a snowball effect that builds your wealth steadily. This approach can be particularly powerful if held over a long period, as your earnings continue to add up. Dividend stocks are commonly found in stable sectors like utilities or consumer goods, where companies have a reliable income and can afford to share profits with shareholders. These types of companies are typically well-established and less affected by market swings, making their stocks a good option for those seeking a balance of income and growth. Investors who prefer steady growth rather than chasing high-risk opportunities often find dividend stocks a good match for their goals. Diversified index funds or ETFs. Next is the option of diversified index funds or ETFs, which are popular choices for those aiming for steady, long-term growth. These funds are designed to reduce risk by spreading investments across a variety of assets. Instead of putting all your money into one company or sector, diversified funds allow you to invest in a broad mix of stocks or bonds, which helps balance the ups and downs of the market. This makes them a great option for anyone who wants growth potential without exposing their money to too much risk. One of the biggest advantages of diversified index funds and ETFs is that they typically come with low fees. Because they don't require active management, these funds can keep expenses low, meaning more of your money stays invested and working for you. This cost-effectiveness makes them particularly appealing for long-term investors, as lower fees mean better overall returns over time. By keeping costs down, index funds and ETFs offer a straightforward way to build wealth without constantly watching the market. Popular choices in this category include S&P 500 index funds, total market ETFs, and sector-specific ETFs. S&P 500 funds, for instance, track the top 500 companies in the U.S., giving investors exposure to a wide range of industries. Total market ETFs go even further, covering nearly every publicly traded company, offering broad exposure to the entire market. For those looking to target specific industries, sector ETFs can focus on areas like technology or healthcare, allowing you to invest in a particular area of interest while still benefiting from diversification. Pension funds or retirement plans, 401k IRA. Pension funds or retirement plans, such as 401ks and IRAs, are valuable options for people planning their financial future. These accounts are specifically designed to support long-term growth, helping individuals save and invest toward retirement. By using a retirement plan, you can take advantage of various tax benefits, which allow your savings to grow more efficiently over time. This makes them an attractive choice for anyone serious about building a secure retirement. One of the main benefits of retirement accounts is the tax advantage they provide. With a 401k or IRA, your contributions grow tax-deferred, meaning you don't pay taxes on your earnings until you start making withdrawals in retirement. This allows your investments to compound faster compared to a regular, taxable account. Some retirement plans, like Roth IRAs, even allow you to withdraw earnings tax-free in retirement, which can be a big help when managing income during your later years. For many people, a 401k offered through an employer is especially appealing due to employer matching. This is when an employer matches a portion of your contributions, effectively giving you free money toward your retirement. This benefit can greatly increase the value of your retirement savings over time, even if an employer match isn't available. Individual retirement accounts, IRAs, still offer significant tax advantages and flexibility with a range of investment options, including stocks, bonds, and mutual funds. U.S. government bonds. Lastly, government bonds, especially U.S. Treasury bonds, are a safe and dependable option for those looking to protect their cash. These bonds are backed by the U.S. government, making them one of the lowest risk investments available. For investors who want stability and steady returns, government bonds provide a reliable way to earn interest without exposing their money to the fluctuations of the stock market. This can make them particularly appealing during uncertain economic times. One of the main advantages of government bonds is the regular interest payments they offer. When you invest in a bond, you're essentially lending money to the government, and in return, you receive interest at set intervals. This provides a predictable income stream, which is especially attractive to conservative investors who prefer stability over higher risk options. Since the payments are consistent, bonds can be a good way to balance more volatile investments or simply keep cash safe while earning a modest return. Treasury bonds come in various forms and durations, ranging from short-term to long-term options. This allows investors to choose bonds that align with their goals and time horizons. For instance, short-term bonds might be suitable if you want easy access to your money in a few years, while long-term bonds may offer slightly higher interest rates for those willing to commit their funds longer. No matter the term, government bonds are known for their safety and reliability. For anyone prioritizing security, U.S. government bonds are an excellent choice. They offer a dependable way to park cash, earn steady interest, and minimize risk. Whether used as a foundation for a conservative portfolio or as a safe haven during market ups and downs, government bonds provide a level of peace of mind that's hard to match in today's investment landscape. And that's a wrap. We hope you found this video helpful and enjoyed learning about smarter places to keep your cash. If you did, please give it a thumbs up. Share your thoughts in the comments about where you invest, and share this video with others who might benefit. If you're new here, don't forget to subscribe to Luxo-Life and hit the bell for updates. See you next time, Luxo lovers.